Welcome to my channel again. This is Business Startup Training, and we're talking about depreciation. In the last time we spoke about depreciation in terms of the asset that we bought, and we spoke about the fact that we have an asset that devalues. We define what depreciation is, which is the valuation of an asset losing value over time. And we spoke about that we need to capture that information via the income statement and the statement of financial position to really show or really reflect what the true value of an asset is. And it's an important accounting principle. Now we're going to continue from where we left off, because we can't go over everything we said earlier, but we would continue from where we left off. So let's crack on. Now here we need to look at the principle of depreciation expense. Now depreciation expense, this is an important principle. As we mentioned earlier, we said in the last video that depreciation, you need to consider two concepts. One, the depreciation expense, and two, the accumulated depreciation. The accumulated depreciation is the aggregate depreciation over a particular period. Now let's talk about the depreciation expense. Depreciation expense is depreciation for a specific time. So it could be for a specific month, a specific quarter, a specific for 6 months, or for a year. So that's what depreciation is. So we're actually reflecting it for a specific period. Now, if it is that it's a year, the accounting period would have closed. So when we're moving to another year, we would need to account for the depreciation again. So when we have two different years now, the principle of the accumulated depreciation comes into play. And even if you have two different periods, we can also consider the principle of accumulated depreciation. The principle of accumulated depreciation is the aggregate depreciation that has been calculated in the past, as well as the depreciation that is going to be considered for the current period. So that's the main idea. Now we need to, and it is important to note that a lot of books do not necessarily explain this principle. In some books, they actually reflect the fact that the accumulated depreciation is in the trial balance, and then in the notes you need to calculate the depreciation for the period. And you would not understand that depreciation for the period generally would need to be considered as an expense. Generally, prior to it's not very clear in that. I mean, generally when we make adjustments, we tend to put depreciation expense in the income statement, as an expense there. But if you were to have prepared it normally without doing it in the notes, in the trial balance, it would be depreciation on the debit side as an expense. And most books don't tend to reflect that. It's normally in the notes, and you need to make an adjustment for it. But the main principle is depreciation expense is the debit side of the entry, and the accumulated depreciation is the credit side of the entry. The depreciation expense is reflected in the income statement. So the income statement captures that information, and the depreciation, accumulated provision for depreciation, is reflected in the statement of financial position. So with this example here, the depreciation for the period, we're just going to look at the last period, because it would take us to a lot of time to look at all the various other things that we considered earlier. So the 2048, which is the last depreciation in year 5, is on the debit side of the depreciation expense account, and we would have it on the depreciation. We have it in accumulated depreciation on the credit side. Okay. Now it is important to note as well that we had depreciation from the previous period of 14,760, and if we add the 2,048 to it, the aggregate of that gives us 16,808, which is the aggregate depreciation for the period to date. Now let's look at what happens in Xero. Now in terms of Xero, we can see here that Xero has the two principles it has a depreciation expense, which is accounting code 416, and the accumulated depreciation, which is the accounting code 751. So we can see the two principles here. The two principles of depreciation expense and the accumulated depreciation. And we can also see here that automobile is the actual asset that is being depreciated. Then we can consider the principle of running the depreciation. So now most times, if you're doing it outside of accounting software, you would need to actually calculate it and then import it via journal. But here with Xero accounting software, you can, once the information is in and it's registered, you can just do a run and it calculates it for you, and it actually inputs it in the income statement as an expense, and then the statement of financial position, adding it to the accumulated depreciation that was there previously. So this is why Xero is quite intuitive in a way. Now we can also consider the disposal. This is another important principle. Now, if we're disposing of an asset, we need to consider three different ledgers, or three different accounts is impacted. The asset that we acquired at a specific point in time, we need to actually look at the ledger that we bought asset for in the very beginning, which is, in this instance, is the VAN account. Then we need to consider the accumulated depreciation, which is the aggregate depreciation that's tracking the total devaluation of the asset over a specific period. So the aggregate of that, the aggregate devaluation of the asset, which is captured over the 5-year period, is in the accumulated depreciation account. Now, from the asset account and then the accumulated depreciation account, we need to put those two bits of information in the disposal account. So we know the asset account is always a debit account. So we have to go on the opposite side, which is the credit side. And therefore, in the disposal account, it is going to be on the debit side. We know the accumulated depreciation account is a credit account because it's actually reflected, it's the account that is representing the aggregate of the period and also is linked to the balance sheet. And we know that's a credit account, and so therefore on the opposite side is a debit, and so therefore the opposite entry in the disposal account would be a credit. And so we know we have the 25,000 and we have the 16,808. So if we, as we said earlier, we receive 5,000, therefore we know that there's a difference. And that difference we consider to be a loss, which we, the business, would need to absorb, because we initially, on the books, the asset is worth about 8,000, but we only can get 5,000 for it. So we have to assume the loss, which is the difference in the value that we assume it is worth and what people are willing to pay for the asset. Now in Xero, we also have the principle of the disposal. So here we can actually see the entries here. We can see the accumulated depreciation here is 9260, which means that this asset has not been around for very long. And we can see that the asset is being disposed, and the bank, you're receiving 3,000, and there's a loss on the disposal of the asset of 3,407.40, which is quite a significant one. The actual cost of the asset is 6,500, so there's a significant loss. Now, it is important to note that this is a journalization of it, and the journal is basically an important representation of what is happening. We see that the 6,500 is on the credit side, which means that we're actually taking it out, because normally the asset account is a debit account. And we can see here the accumulated depreciation on the debit side. It's normally a credit account. So if we see it's on the opposite. And the bank account here, as you know, well, it could be in debit or credit. So, but it's receiving the money here, so it will be debited. The disposal account is debited as well, because we're assuming an additional expense. So that's the principle here. I hope this demonstrates the idea of depreciation and linking the principles of Xero. If you are not clear and you want us to discuss further, please write in the chat and I can maybe answer as many questions as I can. And if you feel you would like one-to-one clarity, you can maybe contact me at businessconsultingandtraining@gmail.com. I'm happy to share my understanding and principles of depreciation with you. Like, share, subscribe. Thank you.